Okay. So when you take the debtors of a business, these items I've listed here are just few that either increases their balance or decreases their balance. Okay. The items here decrease or increase their balance. Now, if you pick them one by one, you see that the first one being the opening balance. If some people are owing you from the previous year, you have to bring it into the account. And as we know, debtors have debit balance. So any opening balance will definitely be at the debit side. If you check the next one, which is credit sales, it means that the business is selling to the customer and not taking money. So credit sale is going to bring more debtors. So it increases the debtors balance. Okay, when you sell to the person and the person does not pay, he becomes a debtor. Okay, so the more you sell on credit, the more your debtors balance go up. Return inwards. If your debtors return goods back to you, that is going to decrease their balance. For example, if your debtors are owing you 5 million Ghana cedis for goods you supply to them, and then they return some of the goods to you, I don't think you would say that they still owe you 5 million. It is going to decrease. So return inwards will decrease debtors balance. The next one, which is very simple, is cash or check received from debtors. When you receive money from your debtors, it means their balance is decreasing because as they pay money, their debt will reduce. The next one is bad debt. And bad debt, as we have been singing to your ears for the past few months, means that the debt cannot be redeemed. So the business wants to cancel it or write it off. So if you are writing off a debt, it means the debt is going to decrease. The next one, which is bad debt recovered. Recovered means that the debt you cancelled, now the debtor is back to pay. So for example, your friend owes you 50 cedis and maybe he moved to Canada. So you just said that, oh, if this guy has gone to Canada, he will not pay this 50. So you write it off as bad debt. 10 years later, he comes back to Ghana and says, oh, I'm going to pay your 50 cedis. So you see that debt you cancelled has now been recovered. So that's the essence of bad debt recovered. So in a way, bad debt recovered would reinstate the debt and for that matter, increase the debt. Dishonored check. Your debtor gave you a check and for that matter, you felt that he has paid his debt. You go to the bank and the bank says they will not pay because of certain, issues. So let me cite an example. Let's say Mr. Amwa Business, okay, is having you as his debtors. So Kenneth owes me 1,000 cedis, Blessing owes me 1,000 cedis, Caleb owes me 1,000 cedis. And then each of you bring me check of 1,000 cedis. So when I receive the check, I'm going to say, oh, you have paid your money, so I'm going to decrease your debt. If I go to the bank and there's an issue with the check and I'm not able to cash the check, what will happen? I'll come back to you and say, Charlie, you are still owing me 1,000 cedis. Okay, so dishonored check in a way is going to cancel the earlier decrease and for that matter would reinstate the debt. Now the last one, which is discount allowed. I don't need to speak a lot about this because we all know that discount allowed means that you are asking your debtors to pay lesser of how much they owe you. So in a way, it's reducing their balance. So if you get the insight of all that I'm saying, that these items either increase or decrease the balance, then if you are preparing the debtors account, all the items that increases the balance or all the items that increase the balance should be debited. And all the items that decreases the debtors balance is credited. Okay, so credit sales will increase it, so we debit. Bad debt recovered will increase it, we debit. Dishonored check, we debit. And all these items that we are crediting will decrease the debtors balance. So that is for the debtors account. If you are solving a question and you are given these items, you just do the analysis and do the debit and credit so you can have your debtors account. So Caleb and Blessing, I want to believe it's okay now. Okay. Now let's go to bad debt recovered. Okay. Bad debt recovered. When you recover a debt, what entry do you have to pass? So let me do this. Let me rule some kind of T account here and make this thing more practical for all of us. If you have any question on what I've said so far, you can ask me about it and I'll answer you. Okay. So let's assume that as a business, we have Kwame as our debtor, right? Because we sold goods to Kwame on credit. And as you all remember, if you sell goods to somebody on credit, you debit the person and you credit sales. Let me do those double entries so that we can all follow it very well. So when you sell goods to somebody on credit, you credit sales. So let's put in figures 50,000 and then you debit the debtor with sales 50,000. So this Kwame is now a debtor. Now follow me here. If you want to write off some of the debt as bad debt, so bad debt, what entry do you pass? We are saying that open another account called bad debt account. So follow it carefully. So this debt that Kwame is owing us, we want to write some off because if you want to mean here. So if you want to write some off, the entry you are going to pass in the debtors account will be a credit one. So you credit the debtor with bad debt. Let's say, for instance, we want to write off 10,000. So you credit the debtor and you debit bad debt, okay, with the Kwame, the debtor, 10,000. So when you see bad debt, the double entry you have to do is to debit bad debt and credit the debtor. Okay. If the debt is recovered, which is bad debt recovered. So for example, this debt that we wrote of 10,000, Kwame says, oh, I can pay it. So he's going to pay the 10,000. So we are going to recover the 10,000. Then the double entry is simple. Okay. You open another account called bad debt recovered account. So bad debt recovered. What entries do you pass? It's very simple. You debit the debtor with bad debt recovered. And when I finish, I'll show you why we are doing this debits and credits there. Okay, 10,000. And you are going to credit bad debt recovered with Kwame, as in the debt that has been recovered. Like this. Now follow me and you'd know that this thing, or you'd realize that it's very simple and very and makes a lot of sense. So look at it. Kwame was owing us 50. And initially we decided to cancel or write off 10. And for that matter, we credited it with that 10,000. Okay. and debited it into the bad debt account. Now, Kwame said that, oh, you don't have to cancel that debt. I'll pay it back. So we recovered it. So look at the entry we passed for the recovery. You would see that it is going to cancel the earlier writing off we did. So in a way, the debt will be reinstated. So Kwame was owing us, we canceled 10, he says he can pay, so we recovered it. And for that matter, he would still be owing us the 50,000. Now, if you check the bad debt recovered and the bad debt account, these accounts are closed to the profit and loss account at the end of the year. So if you remember in your trading profit and loss account, the profit and loss account specifically, what you do is you take bad debt to the profit and loss account as an expense. So at the end of the year, the entry you pass is you are going to credit your bad debt account with profit and loss 10,000. Okay. And then when you go to your profit and loss account, you debit it by way of adding it to your expenses. On the other hand, bad debt recovered is also a profit and loss item. So let me do it here. If you are moving it to the profit and loss account, you have to debit it. So profit and loss account. So 10,000. Now the essence of this entry is that you are moving them into the profit and loss account. So if I'm to open the profit and loss account, this is what is going to happen. So profit and loss account. If I open my profit and loss account, you would reckon that there will be bad debt at the debit side, okay, and bad debt recovered also at the credit side. What does it mean? It means that these things have cancelled each other, and for that matter, there has been no effect because the debt that was cancelled has now been recovered. If you are confused, please prompt me and let me. I'm waiting for questions. Yes, any question for me? No question? Okay, if there are no questions, then please, let's go into the notes and take these notes down. So at least I've been able to demonstrate to you how this whole bad debt and bad debt recovery thing, is recorded in the books of a business. So please take note of that. Let's begin with the bad debt one. So as I demonstrated to you, if bad debt occurs, okay, you debit bad debt and you credit the debtor. So that's what I showed you here. Okay, you credit the debtor and you debit bad debt account. Now, at the end of the year, that bad debt account should be transferred to profit and loss account. And you do that by crediting the bad debt account and debiting profit and loss account. So that is what you see here in the notes. When bad debt is incurred or occurs, debit bad debt. Now, if you want to get a tip to remember this, note that bad debt is an expense, and expenses have debit balance. So when bad debt occurs, debit bad debt, and then credit the debtor. At the end of the year, move it to profit and loss account by crediting bad debt And it only makes sense because you earlier debited it. So if you are moving it, you credit bad debt and you debit profit and loss account. Okay, I want to believe that is okay. Now let's go to the bad debt recovered. So if you recover the debt, like I demonstrated in the example, if you recover a debt, you debit the debtor and you credit bad debt recovered. So you see, another tip I'm going to give you is that bad debt is an expense. So when it occurs, you debit. So if it is recovered, credit bad debt recovered, because bad debt recovered is the opposite of bad debt. So these are some of the similarities you can draw and relationship you can draw between these two accounts so that you don't get confused. Bad debt is an expense. When it occurs, debit it. Bad debt recovered is the opposite of bad debt. Okay, bad debt recovered in a way is a gain. Okay, because Sikana Eshi and way to me recover. So it's a gain to the business. So credit it. Remember, gains are credited or gains have credit balances. Okay. However, again, at the end of the year, you have to move this bad debt recovered to your profit and loss account. Okay. So as you see in the note here, when bad debt is recovered, you debit the debtor and you credit bad debt recovered. At the end of the year, which you have here, you debit bad debt recovered and you credit profit and loss account, as I demonstrated on the Excel sheet. So you see, you debit your bad debt recovered and you credit your profit and loss account with the bad debt recovered. So you need to really get these relationships and double entries so that when you have a question and you are solving, you can also apply these principles. Now I'll speak finally on the provision and then we can make progress. As for the provision, I think by now you should be okay. I've said that it is the first creation and then you either increase it or decrease it. Okay, so last time I used your transportation as an explanation to this provision. When you come to school, you know that you would vacate and go home. So you make provision for transportation. Okay. So if you are making a provision for transportation, you go into your pocket and pick the money. So the pocket of the business is the profit. Okay. And profit has credit balance. So if you want to take some profit, you have to debit it. That is why we debit profit and loss account and then we credit provision for bad debt account. Now, if it so happens that after vacation or when you vacate, the transport fare has increased, what will you do? You go back into your pocket again and bring in more cash. So if you are increasing your provision again, you go to your profit and loss account, debit it to remove, and you credit your provision for bad debt account. So the first, or when you make it initially and when you are increasing it, they have the same entries. You debit profit and loss account and you credit provision for bad debt account. But if you are to decrease it, then it will change. So using the transportation bit, if you provided that, oh, when I'm going home, my transport will be 50 cedis. And then during vacation, when you went to the station, they say it's 30 cedis. You will now see that you are going to get 20 cedis back into your pocket. So when you are decreasing provision, something comes to add back to your profit. And if you are adding to profit, what do? You credit it. That's why for the decrease in provision, you credit your profit and loss account and you debit provision for bad debt account. So know some of these things. Having explained these things, let's see if we can solve some questions or illustrations. But I'm waiting for. If you have questions, please feel free and ask. Gentlemen, can we solve a question? Hey, am I in the class alone or I have students here?
You can continue.
Okay. So I think we can look at your end of semester exams. Let's see. And for Kenneth, we were able to solve it together yesterday. But let's solve that question. Maybe we'll solve more questions. Okay, so this is the end of sem exams you wrote. And I think that was the first practical question. Okay, so it says King James Enterprise has a policy of providing for doubtful debt at 10% on its yearly debtors balance. The following information was extracted from the ledgers for the year 2020 and 2021. So, gentlemen, you are required to prepare the debtors account. Debtors account. So, if you appreciate what we've discussed so far, then you know that for your debtors account, you need, so going back to it, you need the opening balance, you need credit sales, return invoice, these items, right? So if you check the question, what are some of the items you see in there which you would have to record in your debtors account? Please answer me on this one so that I'll know that at least you are with me. So, Blessing, are you seeing some items where you have to use to prepare your debtors account?
Right.
Yeah, Sir Blessing, are you there? Your mic is muted, so unmute it and okay, Caleb, do you see items there you have to use for your debtors account?
Yes, please.
Okay, so take me through what items do you see?
Credit sales,
Uh-huh.
cash received,
Okay.
bad debt written off.
Okay. So you've mentioned 3, is that all?
No,
Uh-huh.
debtors as at 1st January.
Okay, so that is the opening balance, right? Any balance at 1st
Yes, please.
January, that's the opening. Good. So let's use that information to solve the question by way of preparing the debtors account. I think, okay, let me erase this thing so I'll go over. So if you check the question, the details given your focus to prepare your debtors account is only centered on this area where you have the items to prepare the debtors account. So that's where you have to focus your energy. So let's do it. But one thing you have to be careful is that you should do it year by year, because you have 2 years, 2020 and 2021. So you have to look at 2020, which is the first year, before you move on to 2021. So let's begin from 2020. So the first information you ever record in your debtors account is the opening balance. The opening balance. So you put in the date, which is 1st January 2020, and you tell us balance brought down, which is the opening balance, 48,000. That's the first thing you record. Then after, you move on to the items like the credit sales, the cash received, and the bad debt. And you debit and credit based on whether it is going to increase the balance or decrease it. So like we said, if it's going to increase it, you debit. If it's going to decrease it, you credit. So my first question, credit sales, would it increase or decrease the debtors balance? And do we have to debit or credit? Who is going to answer? Blessing, I'm not hearing you. Is this guy around or he's watching? Bless. Okay, Caleb. I solved this with Kenneth, so I'm not calling him. So Caleb, credit sales, what do we do to it? We are going to
debit it.
Debit, okay.
Debit.
That is very true. So we use the closing date, 31st December 2020. Credit sales, 150,000. So for the next one, which is the cash received, that one will be credited because cash received decreases the debt. Yeah. And the bad debt, of course, the bad debt will also decrease it. So 31st December 2020, bad debt, which is 3,000. So you reckon that for the year 2020, these are the information we have to prepare the debtors account. So you balance it and move on to 2021. So let's do the balancing. So we have 198,000. 198,000. So I think the difference will be balance carried down of 198 minus 168. I think it's 30,000. And now please confirm the figures if I'm making mistake. So we have balance 2020. So we move to 2021. 1st January 2021. Balance brought down 30,000. So you now pick the information for 2021 and use it to prepare the debtors account. And we have credit sales, cash received, and bad debt, which is very, very simple. So you just put them in. Have your credit sales. Then we also have the cash received. Oh, I think I'm changing some things. The credit sales should be 180. So, and this is 155, and then so let's balance it. We have 210. So balance brought down Please help me with the calculation. Nobody is doing the calculation. Okay, let me do it myself. 157.5. So I think we have 52,500. So we bring it down to 1st January 2022. Balance brought down 52,500, and that is it. That is all that you needed to do in the exams for the debtors account. So Caleb, I think you've gotten the opportunity to be at par with Kenneth. Or Kenneth, we did this yesterday. So Kenneth, it's a revision for you, I guess. Okay, so we have 1 minute for this session to end. When it does, we would reconnect after 10 minutes, and then this time we'll solve the provision for doubtful debt account and look at the profit and loss extract and balance sheet extract. So join me after 10 minutes so that we move on. If our Champions League, we can listen to the scores or watch highlights. So okay, so I'll see you in the next 10 minutes. Any question,
okay,
anything? Okay, so let's meet after 10.
Okay, we'll join later.